Welcome back. Well, as we've been telling you, cues across Asia have turned a little more mixed. But the implied open suggests that we'll still go on the positive side. I mean, more in swing with the, let's say, the Taiwan market or the Japan market than the Chinese markets. There you go, 122 points higher on the implied Nifty. But lots of stocks to track, lots of earnings over the weekend as well. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning to all of you. Let's start off with Reliance Industries, Rima.
Well, it was actually a pretty good set of numbers. With the appropriate disclosure, Reliance Industries has clocked in a very strong, steady and a good performance. The key positive was acceleration for Reliance Retail. Reliance Retail's top line grew by 16%, EBITDA expanded 15% on a year-on-year basis, and that was a beat. Even the oil to chemicals business, yes, overall it was subdued. The O2C EBITDA declined year-on-year, but it was still higher than street expectations, while Reliance Jio clocked in a steady quarter. On expected lines, the average revenue per user expanded. The company added subscribers by nearly 6 million sequentially. Also, the positive is the new energy plans are unfolding for the company, and that needs to be tracked very closely. So the company has now commissioned a gigawatt-scale HJT technology-based solar module plans. So details on this, the street is quite excited about. Quick word on the brokerages. Nomura has raised the target price to 1650. 3 triggers to watch in the near term. 1, scale up of the new energy business. 2, watch for upcoming tariffs from Reliance Jio. And 3, monetization, particularly Reliance Jio. They say Reliance is their top pick in the energy sector. JP Morgan Stanley also overweight on the stock. For JPM, the target price 1530, Morgan Stanley 1606.
Okay, all right, Rima, thanks a lot for that. Well, let's focus on the big deal that was announced on Saturday night. Sudarshan joins in to tell us about Mahindra and Mahindra going ahead and finally buying SML Isuzu. Sudarshan, morning.
Morning, Nigel. So what our sister channel had reported a month ago is now confirmed by Mahindra and SML Isuzu. So both the companies have announced that M&M is going to acquire nearly 59% stake in SML Isuzu, and of that, nearly 44% stake is going to be acquired from promoter Sumitomo Corp and 15% from the public shareholder Isuzu Motors. And this acquisition from promoter and from Isuzu will be done at a rupees of 650 per share, and that would be worth almost rupees 555 crore. Apart from this, Mahindra and Mahindra will also make an open offer to acquire additional 26% stake, and for open offer the price is rupees 1555, which is a discount of almost 12% to Friday's closing price. It's an all-cash deal, and both the companies expect the deal to be completed by December of 2025. Now, what's the objective of M&M going ahead and going to acquire this stake from SML Isuzu? The reason is M&M is looking to expand its truck and bus business. Currently, in the capacity of CV, that is of more than 3.5 tons, in that one, M&M's market share is almost 3%. And SML Isuzu also has market share of around 3%. So M&M post-acquisition, the market share will increase to 6%. And in this segment also by 2031, M&M is looking to increase the market share in the range of 10 to 12%. And by FY36, it's looking to increase market share of more than 20%. So considering the price in which the deal is done, it's a good deal for M&M as far as M&M is concerned. But I'm going with red for SML Isuzu because the stock has run up significantly over the last few months. In 2025, the stock is up almost 26%.
All right. So thank you very much for that. So keep an eye out on those two names. L&T Finance is the next one we want to focus on. Abhishek is here with details. Abhishek, morning.
Morning, Prashant. So to begin with L&T Finance, the disbursements growth was really weak and asset quality also deteriorated over there. So take a look at disbursements. They are down by 2.95% on a YOY basis. It's the highest decline that you are seeing in last 8 quarters. Now, YOY and quarter-on-quarter decline in disbursements were seen in two-wheeler, rural, as well as housing finance and retail business. Asset quality, one of the worst that you are seeing in last 7 quarters. Gross NP ratio has inched up to 3.29% versus 3.23% in the previous quarter. When your disbursements are weak and your asset quality deteriorates, the NII growth weakens, and NII growth rate of 1.4% YOY is the lowest that you are seeing in last 11 quarters. There is a sharp decline in net interest margin by 35 basis points sequentially. Hence, the net interest margin is at 7-quarter low. Now, AM growth is also weak at 14.3% YOY and just 2.8% sequentially. AM growth declined both YOY and quarter-on-quarter in real estate financing, infra financing and wholesale financing. Back to you.
Okay, all right, got it. Thanks for that, Abhishek. Let's move forward. We have Sudarshan joining in on IGL. Good morning.
Morning, Surbhi. So, company has reported a healthy set of earnings for Q4. It's an operational beat. EBITDA has increased by 37%. It has come in almost rupees 500 crore, and estimates sort of EBITDA, it was around rupees 410 crore. So, it's a beat on this front. Margin has also increased to 12.6% in comparison to nearly 10% in the Q3. Volumes were largely in line. It has come at 9.2 MMSCMD, and that is the flats on a sequential basis. The biggest positive, EBITDA per SCM. The estimate for EBITDA per SCM was around rupees 4.80, say rupees 5, but company has reported EBITDA per SCM of rupees 6, and that should be taken positively, and that's the reason I'm going with green for IGL.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's go back to Rima. She's here to tell us about Tata Tech as well as Zensar Tech. Rima, take it away.
Well, let me start with Tata Tech. The top line was a tad bit subdued. The company's constant currency revenue growth declined by 3.3%, but the EBITDA margin performance was better. Margins improved to 18.2%. The auto part of the business struggled, while the aerospace business, which is a smaller portion on a low base, has actually done very well with an 8% growth. So that explains the top line. The company also said the BMW JV is actually ramping up ahead of schedule. JP Morgan has an underweight call on Tata Tech, and they're saying we're expecting a low single-digit revenue growth in FY26 with flat margins. Keeping that in mind, the current valuations of 37 times PE is expensive and not justified. Zensar has reported a pretty decent decent numbers given the context. Revenue growth was at 0.9%, margins up 10 basis points. The total contract value of deal wins up 4% quarter on quarter. So at least there is some growth, compared to many other companies where we've seen revenues drop off. The problem is manufacturing and healthcare that declined for the company, and the company in the conference call said that they anticipate FY26 to be better than FY25.
Okay, all right. Got that, Rima. Thanks very much. Back to Abhishek then. More numbers on the financial front. IDFC First Bank and Poonawalla FinCorp. Abhishek?
Well, IDFC First Bank, they have overshot their credit cost guidance for FY25. So their FY25 credit cost is at 2.46% versus the guidance of 2.25%. In terms of our poll, both the NI and PAT, they are lower than our poll. Microfinance SMA 1 and 2, that book increased to 5.1 versus 4.56% in the previous quarter. So watch out for MFI stress in the coming quarters as well. Net interest margin is at 10-quarter low. NI growth on a YY basis is less than 10%, the lowest that you are seeing in last 22 quarters, and just 0.1%, which is the lowest in last 19 quarters. ROA continues to remain weak. Quarterly annualized slippage ratio has declined a bit by 20 basis points, 3.73 versus 3.93%, and thanks to a write-off of 1,486 crores, gross NP ratio is one of the lowest that you are seeing in last 17 quarters. Now, Poonawalla FinCorp, unbelievable, the AUM growth is unbelievable, robustly high with respect to all the lenders that you are seeing. Operationally, a weak P&L over there. So AUM growth is at 42.5% YOY and 15% quarter on quarter. No other lender has seen this kind of massive growth. The NI growth is weak at 11.5% YOY and just 6.4% quarter on quarter. Weak with respect to if you compare to the AUM growth. Operating profits have declined by 41.8% YOY. PAT is down 81% YOY, and it's up about 233% quarter on quarter thanks to the low base. Key ratios, if you watch out, the calculation shows that the net interest margin has declined both YOY and quarter on quarter, and ROA continues to remain below 1%. Asset quality largely stable with respect to gross NP and net NP ratio. Back to you.
All right. Thanks a lot for that, Abhishek. In fact, we have the management joining us at 10:15 a.m. to discuss their Q4 earnings. So stay tuned to that conversation of IDFC First Bank. Mr. Vaidyanathan will be joining in here on CNBC TV18. Well, today the big numbers that I'm going to be looking at is going to be UltraTech Cement from the cement pack, but we have one of their, the companies that they own, which is India Cements, that came out with its set of numbers over the weekend. And it seems in the first quarter of them taking charge itself, they've tried to make some kind of difference. On the top line, there was only a 3% degrowth. We were getting used to seeing higher degrowth numbers coming in from India Cements. And the EBITDA number is still a net loss, but the EBITDA loss has come down to just 3 crores. So that turnaround strategy is something that we'll be focusing on. Expect the stock to open up in the green because it's corrected 25% from that open offer price. And now it trades at around $80 per ton on an EV per ton basis. The net debt has come down to around 1,000 crores or thereabouts on a year-on-year basis. That's sharply lower. And they'll also benefit from the price hikes that have been taken in South India. So we can expect an improved performance coming in Q1 FY26. So put all this together, going with green on India Cements. That said, let's do a quick recap of all the top stocks which has covered. The ones with positive news flow include Reliance, Mahindra & Mahindra, IGL, Zensar Tech, Poonawalla Fincorp and India Cements. While the stocks with negative news flow include SML Isuzu, L&T Finance, Tata Tech and IDFC First Bank. That's about the equity markets. Let's turn our attention to the commodity pack. We have Manisha who joins us as always to tell us what's going on there. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the gold prices because we've seen further decline coming in for this one. Remember, Friday was a 2% of a decline, and now from the all-time highs of $3,500 an ounce, the gold prices have come off by nearly 6%. Well, there has been rebound in the US dollar index. There are also potential partial exemptions and tariffs, perhaps between US and China. And the markets do believe that the global trade tensions in some sense may be easing as US continues to negotiate with various countries. And that's led to that long-awaited profit-taking in case of the gold prices. The one thing that really seems to be getting support right now is the crude oil prices. They have been inching up in Asia, trading flat to slightly marginally on the higher side right now. Well, the markets are reacting to China Politburo meeting, which is vowed to stabilize jobs, increase insurance funds, etc. And then the markets also are reacting to the Iran port of Bandar Abbas explosion. The street will watch out for the OPEC and allies meeting. Remember, they are increasing production from the 5th of May, and there is a meeting on 5th of May as well, which will decide on what happens from the month of June in sense of output from OPEC and allies. So it's going to be an interesting next couple of weeks, especially for the crude oil prices.
All right, Manisha, thank you very much for that. So oil in focus as well. Now, Maruti reported a weak set of numbers for the fourth quarter. EBITDA fell about 9%, net profits fell 4.3%. Those comments from Mr. R.C. Bhargav, chairman in Maruti, really made headlines, essentially talking about, FY26 domestic growth unlikely to be better than FY25. And of course, there were also comments about effective purchasing power, in terms of consumers in India and how that needs to sort of grow for sustainable growth. I mean, slightly macro-ish comments which made the headlines, but this is, of course, what he told us earlier. Listen in.
The projections made by SIAM on the auto industry for 25-26 do not show a better picture than 24-25. Last year, we grew at about 3%. The forecast made by SIAM is 1 to 2%. So the domestic demand is not growing beyond what it has been in the past, maybe falling a little bit. Where we see a silver lining is that our exports are going to grow. We grew exports at 17% last year. We expect that exports this year may grow at about 20% this year. So that is going to make up a lot of what may or may not happen.
Okay, that's Mr. Bhargava talking about the road ahead for Maruti. We have to take a very quick break. Come back on the other side. We'll be in conversation with Prakash Diwan and get you some fundamental analysis on the stocks in focus today.